Hello and welcome to the Accounting and Finance Coaching Session with Echela Okore. So if you're just joining me, today is the first session for this Accounting and Finance Coaching Sessions. And it just occurred to me that a lot of people may actually want to become professional accountants. And there are people that can be mentored. And also there are people who are already professional accountants or just working in accounting positions in various organizations who need to sharpen their skills. So that is the essence of this class. So if you're already an accountant, perhaps a qualified one, or perhaps not qualified, it doesn't matter. Also, if you are someone who has always wanted to be an accountant, but you never really had the opportunity. The world is a global village today, so I want to use this opportunity to help you to master accounting skills so you can be beneficial to yourself, to your family, and to your society. And also to help other accountants all over the world to be up to date with the accounting standards, with changes in the accounting sector. We are aware that artificial intelligence and machine learning is really on the move. And so we as accountants, we need to up our game. So I'm going to start from the very beginning, and this is an introduction class, and of course this session is introductory in nature. Basically, we are going to identify the meaning of accounting. What really is accounting? So many scholars have defined accounting in various ways. This is not an examinable question per se, but it is important to understand what you want to study. So what is this accounting? Accounting is essentially a process. It's a process, we have processes of doing so many things. Accounting is also a process of doing something. And what is that thing we do in accounting? So if we're going to agree that accounting is a process, then what is the process? What process? Process of doing what? Process of recording. And what is it we record? Do we take records of people who will go to hell and people who will go to heaven? Not necessarily. Accounting is a process of recording data that is financial in nature. Financial data, basically. In other words, it is a process of recording financial transactions, financial events. And let me explain there. Now, by financial transactions, we're talking about transactions that can be quantified in monetary terms. So, accounting is a process of recording those transactions, those events, which are financial in nature. It is also a process of classifying them. We also classify. Every accountant will tell you debit, credit, assets, this and that. It means that every financial transaction falls into a class, and that is why we need to classify. It's that item, is that financial transaction an asset? Is it a liability? Is it an income? Is it an expense? Is it a capital? Is it a drawing? We need to identify, and that identification is what we call classifying. So it's a process of recording financial transactions, classifying the financial transactions too, and also summarizing them. We summarize. If you want, you could say we also analyze. Okay? That when you do this, you classify, you summarize. Essentially, you have analyzed. Now, once we've done this, the next thing we also do, we also interpret. We interpret. And if you like, you could also say we communicate. We communicate. So, what is accounting? I go back once again. It is a process, or the process rather, of recording financial transactions, classifying those financial transactions, summarizing the financial transactions, interpreting those financial transactions that were recorded, classified, and summarized. And then we interpret them, and then lastly, we communicate. Communicate to who? To users. We communicate to users. And why are we communicating to users? We're communicating to users to enable them make informed decisions. And who are these users? We have internal users, we have external users. Internal users are users that exist inside the entity, inside the business, inside the company. There could be management, there could be employees, there could be union organizations, and so on. All right? And then external users of the account could be shareholders. There are different classes of shareholders. There could be ordinary shareholders. There could be preference shareholders. Okay? There could also be creditors, like the venture holders, bond holders, and all that. Okay? And then there could also be competitors, people who are competing with your businesses. Okay? They may also want to use the account. Then there could also be investors, people who have invested, existing investors, who are the shareholders essentially, and of course they could also make other investments. Also, they may not be existing, they could also be potential investors. So you can see that we have so many classes of users. You have the government uses it. You also have, for taxation purposes and all of that. There could be researchers, there could be academics. They all use accounting information. So, to summarize, we say accounting is the process of recording financial transactions, that is, events of financial nature, classifying those transactions that have been recorded, summarizing them, interpreting them, and then communicating the information, the data that has been refined, the financial data that has been refined, recorded, classified, summarized, interpreted. After all this has been smoothed out, we now communicate this information to users of the information so they can make decisions. So you can see that essentially accounting helps all sectors, and that is why there is hardly an organization that does not have an accountant. So accounting is a very, very important discipline. You cannot do without accounting, because for an organization to succeed, there must be some monetary consideration. There has to be financial transactions. And these financial transactions must essentially be recorded, must be classified, must be summarized, must be interpreted, and must be communicated to the owners of that business for them to make informed decisions. And what are these decisions? So many decisions. It could be decision to buy or to sell. It could be decision to divest. It could be decision to expand. It could be a decision to withhold something. It could be a decision to retain profit. It could be a decision to pay bigger dividends. So many decisions. There are so many decisions. It could be a decision to invest in A instead of B and all of that. So that is the meaning of accounting. I'd like you to define accounting in your own words. Don't memorize. Don't memorize. Memorizing definitions are not the way to go. Learning is a process. Learning is not about memorizing and passing exams. It is about understanding and making use of what you've understood to better your life, to better your organization, and to better the society. So that is essentially what accounting is. Now, having done that, there was something I talked about. I talked about classification, and that brings us to the elements of the financial statement. Before I do that, you see there's a process from bookkeeping down to preparation of the financial statements. And usually, what do? We identify financial transactions. We identify financial transactions. After we identify financial transactions, the next thing we usually do is to get the source documents. The source documents. What are the source documents? We're talking of the documents that relate to the transactions that have been identified. For example, if you made a sale, if you're in the business of making sales, of selling products or services, you identify that financial transaction. You sold to somebody bought from you. Now, there must be a source document. Perhaps the person made a transfer to you, transfer of funds, or the person paid through the bank. There must be a document to show that on that particular date, a transaction took place, and that is a source document. So it could be your receipt, it could be an invoice. Those are source documents. They come in various forms, but they are documents that relate to the transaction, that tell you the date, that tell you the nature, and that tells you the amount and the name of the person that you did the transaction with. Also, after this, we do what we call journalization. We journalize. This is essential to bookkeeping. We journalize. Journalization helps us to put our records, the record of our financial transactions, it helps us to put them in a chronological order. One transaction must have happened before the other.